All right, so continuing on with this higher level, so I'll try the example and on to adjustment C. Patents incorporating 4 months investment income received are to be written off over a 5-year period commencing in 2019. Okay, so we have patents in the accounts of 50,500, and for some reason investment income has been included with those. Okay, so investment income should go into your profit and loss as other income. For some reason they've been thrown in, added on to your patents, or included in the patents account rather. All right, the adjustment here is straightforward enough. So just a tricky idea to get your head around at the start, maybe. So first thing we need to do is figure out what 4 months investment income is, and then we'll deal with what we do with it. So working 5. So investment income. So we have 12% investments of 150 grand. So it's 150,000 investments multiplied by 12%. That's 18,000. And then that's a full year's investment income. It's 4 months that's included in patents. So get 4/12 of 18,000, and that is 1/3, 6,000. So that's investment income, 4 months. Now, that's included in with patents by mistake. So the first kind of logical thing you might do is say, okay, it's included in there by mistake, so I'll take 6,000 away from the 5,500. But this is where we just need to think about the kind of debits and credits of it a little bit more. So investment income should be income in the profit and loss. So something else which is income in the profit and loss is sales. 784 there. So income in the profit and loss account is a credit entry in our accounts. Okay, so that's what side of the accounts income goes on, the credit side. So that 4 months investment income of 6,000 would have been put in on the credit side of the patents account. Patents is on the debit side, it's an asset. So if you put 6,000 on the opposite side of the account, you're actually going to reduce it. So to undo putting the 6,000 in there, I would actually add it on to the 50,500. Okay, so just to kind of take a bit of time to get your head around that. So the 6,000 should be kind of in its own credit entry, 6,000 investment income on the credit side. It was actually put in to the patents account. So if you put 6,000 on the opposite side of the patents account, it will reduce the balance of the account down to 50,500. So to undo it, I'm going to add it on. Okay, so before you put that 6,000 on the credit side of the account, adding those together, you would have had 56,500. So that's how much you have in patents, okay, before that 6,000 reduced it. So that's what we would put in to the balance sheet as our intangible asset, but I'm told that patents are to be written off over a 5-year period commencing 2019. So we're not going to have the patents sitting on our balance sheet forever. These are kind of running out in some way, so we've decided we're going to write them off over 5 years. It's like depreciation. Okay, so you write the cost of your asset off every year over its useful economic life. That's what depreciation is. So you subtract a little bit of depreciation from the cost of the asset every year until it won't be, it'll be valued at nothing in your balance sheet. That's what we're doing with patents here. So we're going to take 1/5 of it away every year for 5 years until it's valued at 0 in our accounts. So if we're writing it off over a 5-year period, just divide the 56,500 by 5, and you get 11,300. And that's going to go in the profit and loss as an expense. So it'll be an admin expense. So the write-off of patents. And you're also going to subtract it from your patents on the balance sheet. Okay, so you're not going to put in balance patents as 56,500. You're going to put it in as 56,500, take away 11,300, 45,200. Okay, you'll see when you look at the balance sheet, unlike fixed assets where you put in the cost, the accumulated depreciation, and net book value, for patents you're just going to put in the 45,200, those two subtracted from each other. Okay, if you want to, as part of your work, and do 56,500 take away 11,300 equals 45,200 and say that's what's going in the balance sheet, do. Okay, so you'll see like sometimes I'm kind of actually figuring out the new figure that goes in my accounts, and other times I'm just saying what I'm going to do with the adjustment. Okay, so it's kind of a mix of approaches there. Like here I'm saying 3950 is going to be added on to accumulated depreciation in the balance sheet. You could actually do that addition and figure out what the accumulated depreciation is as part of the working if you want, whichever approach works better for you. So that's adjustments, or adjustment C dealt with. Next one then, adjustment D, no record had been made in the books for goods in transit at the end of the year. The invoice for these goods had been received showing the recommended retail selling price of 12,500. So we've purchased these goods, okay? Because they're in transit, they haven't been entered in our accounts yet, so they're on their way to us. But we have purchased them and they're on their way to us, so they should be included in 2019's accounts. All right. So no entry's been made, so we're going to have to make the entry for them. Now the recommended selling price is 12,500, so that's presumably what we're going to sell them for. We need to figure out how much did I buy these for, okay? And it says the selling price of 12,500 is cost plus 25%. So it's the cost I'm trying to get at. That's what I'll buy those goods for, okay? So you need to work back to cost, okay? So this is working 6, and so they're worth. The goods in transit have a selling price of 12,500. I'm told that includes your 25% markup. Okay, so this is like 125%. Okay, so you have the cost of the goods and then you added 25% on. So if you divide those by 125 and then multiply by 100, you're getting back to 100%. You're getting back to cost price. So that would be 10,000. Okay, so that's how much you actually purchased the goods for. Okay, no entry has been made in the accounts for this 10,000 at all. So what do I need to do? Well, it's going to need to go into purchases. So I could say that here, that I'm going to add it on to purchases, but I've already got it working for purchases, working too. So let's just add the 10,000 on here. And that's 502,000. So that's your purchases figure that goes into the accounts. Profit and loss, the trading account, the cost of sales. All right. Where else would it go? So it would be included in closing stock. So if you've bought that for 10 grand and it hasn't been entered in the accounts, well then it's going to be sitting there unsold at the end of the year. So it should be included in our closing stock at the end of the year as well. So you should add on, you can put in that this is working 6, that you're getting this 10,000 from if you want. So then add on 10,000. So this is goods in transit. Add on 10,000 for goods in transit coming from working 6. So your closing stock is going to be 505,000. Okay, so that's, and just looking at it, I don't think there's anything else I do to closing stock. So that's the number. Sorry, that's 49,500 plus 10. So sorry, that's not 495,000. So that's 59,500 is my closing stock figure. And just having glanced at the rest of the questions, nothing else to do to closing stock. So it's that 59,500 which is going to go in your cost of sales and also in as a current asset. Okay. Now this 10 grand, I've put it in how many places? 1, 2, 3. So it's gone into purchases, it's gone into cost of sales, it's gone into current assets. So it's gone into your accounts 3 times. It's going to need to go in 4 times because it needs to, double entry. We need to balance this out. So if you purchase it, there's no mention of actually paying for those goods. Okay, so if we haven't received them at the end of the year, we probably do all our business on credit. So I'd assume we haven't actually paid that 10,000 euro yet. Okay, so the other place the 10,000 needs to go is creditors. Okay, so that 10,000 euro is going to be added on to creditors because it's you owe someone 10 grand for those goods that you've purchased. Okay, so you can write here that it's added on to creditors, or you can bring the creditors balance in and kind of work it out, whichever way you prefer to do it. So 66,200 is the creditors number from the accounts. So that's creditors from the trial balance. Add those together and you get 76,200 is your new creditors figure. All right. Yeah, so that's creditors. So that goes in current liabilities in the balance sheet. All right. If you had paid for them with cash, then the other entry would be reducing bank. Okay, but whenever this comes up, I'd imagine you won't have paid for the goods. So the entries you'll generally make for goods in transit will be added on to purchases, added on to creditors, added on to closing stock, and then the closing stock goes in 2 different places. Right. Next then. So it tells me the suspense figure arises as a result of the posting of an incorrect figure for mortgage interest in the mortgage interest account and discount received of 400 euro entered only in the creditor's account. Okay. So we're going to have to kind of undo these errors. So an incorrect figure for mortgage interest was entered in the accounts. So let's so what figure is in there? So mortgage interest paid for the first 3 months is 4,500. Okay, so what should that be? So we have a 9% mortgage, including an interest of 40 grand, increase of 40 grand on the 1st of April. Okay, so if we're looking at mortgage interest paid for the first 3 months of the year, it's before this 40 was borrowed. So let's 200,000 less 40, so 160,000 was the mortgage at the start of the year. So mortgage at the 1st of January is 160,000. It's 9%. So 9% of 160,000 is 14,400. And then that's a year's, so that's 9% annually. So that's a year's interest. So we're only interested in the 3 months. So that would be 3,600 is 3 months interest. Okay, so that's what 3 months interest should be. Mortgage interest paid for the first 3 months was entered into the accounts as 4,500. So if you subtract those from each other, you get 900 euro. Okay, so 900 euro is the mistake. Now, how do I correct this mistake? So this 4,500 should be 3,600. Okay, so your debit side is €900 too high. Okay, so this 4,500 should be 3,600. So your mortgage interest is €900 too high, or it's €900 too much on the debit side. All right, so if €900 was put in too much on the debit side, to correct that, they would have put in €900 on the other side to balance it out. Okay, so our accounts are 900 too high on this side, on the debit side. This should only be 3,600. Okay, so that would have thrown your accounts off. So to correct for that, they would have put €900 in on the credit side of insurance. Okay, so this is 900 too high, so to balance that out, they put a 900 over here. Insurance is a debit balance, so putting 900 over here would make this 900 smaller. So the correction I need to make here for suspense is my insurance is 6,200 in the accounts, and I need to add 900 on. Okay, so that's like for the interest error. All right, it's a tricky one to kind of get your head around. That's kind of, you kind of do have to kind of think it through each time you do it. Okay, so I'm not adding that on yet because I know there's another error included in insurance. So let's deal with that now. So incorrect figure for mortgage interest in a mortgage interest account, and discount received of €400 entered only in the creditor's account. So discount received of €400 is entered only in the creditor's account. So where else should a discount received go? It should go in your discount account. Okay, so let's think through the kind of debits and credits of this then. So €400, it's discount received. So discount received of €400 should be here. Okay, so it should be included in your discount. Okay, so you're going to add the €400 on to discount. So let's do that. So discount net per the trial balance is 1,700 plus a discount received that we haven't entered into this account of 400. So that's 2,100, and that's the discount received, which needs to go into so its credit side is received, it's other income. Now we're missing a 400, so if that was put into creditors, that 400, so creditors 66,200. If we gave a discount to a creditor, that would reduce creditors. Okay, so the entry we made for that 400 was to put 400 on the debit side of the creditor's account. So a discount will reduce your creditor's balance. Okay, so instead of saying you owe me 66,200, well, it won't be, it won't be all for one creditor, but instead of owing this, you're subtracting 400 away from that. So you're saying I'm giving you a discount. So that would have gone in the debit side of creditors. Okay, just putting it on the debit side of creditors will throw off your accounts because there needs to be a credit entry of €400 as well. So that's what would have gone into the suspense account, the €400 credit entry. okay? Because we're saying we didn't put it in the discount like we should have, okay? So €400 was correctly put on the debit side of the creditor's account. And then to make the accounts balance, we put €400 on the credit side of insurance. So to undo that €400, because that's going to be reducing your insurance amount, I'm going to add the €400 on to insurance. So plus €400. So that's 6,200 plus 1,300 is 7,500. So that's your insurance number. So that's your admin expense. Okay, so these are correcting the errors which were made in the accounts. Okay, so the effect of those errors, just shoving them into insurance, meant your insurance balance or your insurance amount was reduced. So I'm undoing that and bringing it up to the 7,500 it should be. The other side then maybe of the mortgage interest issue, I'm going to deal the next. The next adjustment is about making provision for mortgage interest and investment income due. So I'll deal with the kind of mortgage interest and what that should be in the next adjustment. And I will deal with that and the rest of them in another video.